Welcome to my show Kamal Realty Talks, first episode of Real Estate Unlocked, the show where we break down the property market in practical and very simple language so that you can make your confidence on the properties what you're buying. Today I have a guest, Mr. Siddharth Chugani, who has been in the market last 20 years, worked with so many clients, worked with so many banks as well. And today he's unlocking us many of truth, how the mortgage works. He has his own company, Money Matters. So, Mr. Siddharth, welcome in this show. And I just, first of all, give your intro by yourself.
First of all, Kamal, it's a pleasure and honor for me inviting you. Pleasure that you have invited me, and honor, as you said, this is your first podcast. So it's really honor that I am the first person as your channel partner to be invited. So as you already mentioned, Kamal, I have been like in more than last 2 decades. I have been in Dubai in banking with mortgages itself. So I worked with a couple of major banks when I started my career here in mortgages, now which has been like more than 20 years. And after spending like my half of the tenure of my mortgages career in Dubai, then I decided why not to start my own company. I was very confident about how the market dynamics work. I have seen quite ups and downs in Dubai, and uh, the main thing which motivated me here, like there are lots of clients who comes here. They have a dream of buying their houses, making biggest financial decisions. So I think I was quite since a long time and a experienced person, whom I can guide and people can trust on my words. Because in banking, I have lots of clients who my main business was, they used to, my clients own used to refer their own friend, their family people. So I thought if I start my own business, I have a big team whom I can support with the clients' requirement leads. I have people like you who are veterans in the real estate market. Um, I can fulfill your requirement because working in the bank, you are stick with one bank's product.
And
But
what keeps you passionate about it? See, there are many companies, many mortgage companies I have seen in the market, but you been in this industry last 20 years. How you started, you already said, but what keeps you passionate in this field?
so that's what I said. See, like mortgage market is there was no houses before 20 years you can buy it. So this was a very new market, new dynamics, new things to learn. It is mortgage is all a need based product. Okay, so you have clients who really wants to make their house buying decision, purchasing decisions like their dream. So I like helping people to make their decisions uh, with more clarity and more transparency. So, of course, the market, as I told you, is the need-based product, and there are people who knows me that how my work to guide them to make their dreams come true. So this really motivates me, and meeting there, there are more than 180 nationalities here. You meet new peoples, more different kind of
That is the
profiles.
one common thing in your industry and our industry that we meet always a different people from different industry. We get referral. People once work with you, and if you are given a best service, definitely he will refer to 10 more. This is how it works.
True. So that's when you give a clarity, a transparency to clients, when the deals are concluded, then they really realize how easily we have achieved their dream home. We have many clients when they have moved to the new houses, and they have invited me in their housewarming parties, and they introduced me to there lots of friends and all. See, we are in their house because of Siddharth, the way he has motivated us, to purchase a house, how we can regularize our EMIs, our financial structure. So it's not only about, just about getting some guiding them to buy a house. It's also about, structuring them, how you can make your, financials within your budget, uh, getting them a proper advice and no hidden cost and all these things. There are many costs which are associated with the your EMIs or home loans, home finance. So when people see, oh, sometimes they are not aware, like they can go a mortgage for a 25 years tenor and all. So when we tell them, yeah, this is the time, you can also there is a certain facilities in the back where you can make a partial settlements. Okay. So when you do partial settlement, bank give you the option of lowering your EMIs, or you can, after doing some partial settlement, you can also reduce the tenor. Suppose in today's structure, you are taking a mortgage for, let's say, 25 years, but you want to finish it faster. Someone gets a bonus or something and they do a partial settlement, so your tenors also becomes less with keeping the same EMI. So when people see, oh, we are paying the interest of in 25 year this, but the average size, the tenor of the mortgages in UAE is around 6 to 7 years. Either people upgrade the property, or they get bonuses, additional income, they settle the mortgages and all.
So, how do you see the market? See, last 10, 15 years, there is a big difference in the property market overall. If I say the way property market, UAE property market. So, what is the biggest shift you see comparing the last, how the banks and how the mortgage works now?
See, it is now mortgage is more stabilized. The market is very matured now. Okay. Now, there was a time when it used to take weeks to get the pre approval for the client. Now, it is shifted to days, maximum 3 to 5 working days. And sometimes if your salary is proper regularized, your credit bureau score is quite good, so we can get you sometime the approval within a day or sometime in minutes also. So there is a concept which is banks have introduced, which is called a digital pre-approval. So they do their own internal check from the credit bureau with the client bank statements and all, and they give you a pre-approval within sometime within a minutes or an hour. So this is market is matured. Now it's been 20 years. People in the bank, they understand things more easily. They are more crystal clean. Clients also understand, yes, they should have a proper streamlined structure. They should not be overburdened with other liabilities and all. So these things make easy. Clients also understand, yes, if I keep my financials liabilities as low as possible, I will be eligible for a higher amount, and I can expand my budget for purchasing a property in this case.
Okay, now let's break the things for a mortgage. Like if a person is buying a first time property in Dubai, what are the core basic things in a mortgage they need to understand?
See, the main thing for first time buyer, that you get a maximum LTV, which is loan to value, 80%. This is again, there are some grades, for a first time buyer, second time buyer, second property and all this thing. But in a simple words, if first time buyer who purchases the property, you get, and the property value is below 5 billion, you get straight away 80% LTV, that is loan to value. Then there is another thing called DBR, debt burden ratio. Your liabilities, including the proposed mortgage, should not exceed 50% of your income. Now there are different banks, Kamal, they have different policies, different criterias for underwriting. Clients have salaries, other than they have rental income. Suppose they have uh, like variable incomes, flying allowances for the pilots. So every bank had different policies for considering their variable incomes also.
Okay. One more thing, just right now in this market, what is the bracket you're gonna give for the interest rate? I know it's most of all the banks are having a different interest rate, but what will the bracket, what will be the minimum and what will be the higher part of this interest rate?
See, there are around 20 banks operating in UAE. Every bank has different rates. Okay. So now, if I say the lowest rates start with 3.75, 3.79%, but it also depends on the profile of the client. For salaried, it's different. There are many kinds of, grids, like a client who wants to do a salary transfer to that particular bank, they gives you some rate discounts. There is other costs involved. So if you think in a simple words, the lowest rate start with 3.79%.
And what will be the
Yeah. Maximum is again, there is no limit for the maximum. Like it depends on the clients. Salaried customer rates are different. Self-employed clients are different. If you are taking below 50% LTV, if you are taking above 50% LTV,
so
so
many
20
factors
banks.
which affects.
If I'll tell you in simple word, like one bank has around 10 to 15 grids for different profile of the client: resident, STL, which is salary transfer letter, non-salary transfer letter, self-employed, non-residents, LTV below 50, above 50. So it is, but in today's time, you see, if you go for a fixed rate, the minimum is 3.79, and it goes up to, for salaried customer, maximum the rate goes is 4.49%. So it's not huge difference, but 3.79 to 3.49%, 0.7% difference.
So I see so many buyers are confused with a fixed rate or a variable rates. Can you explain it how it works?
See, like the how the petrol prices fluctuate. So variable rates is also aligned with the US global markets. So when the Fed rate changes, the EBOR, Emirates Interbank offer rates, they are also linked with the US global system. So when you uh, go for a mortgage, so we suggest in today's time, it is always better to take a fixed rate, because it gives you more stability of your EMI to structure your finance, your liabilities,
And that is settled, like it's a fix, so that the client also think, okay, this is particular my EMI and I have to pay.
Yes.
There shouldn't be any factor or there shouldn't be any changes come, however the market go.
Yeah. So you know how the global markets are changing currently. So it is my advice, you go for the fixed rates. The rates which I was telling you is 3.79% to 4.49%. These are the basically a fixed rate. In today's time, if you see, the variable rates are much higher. And tomorrow it can be more, it can be less. So we to have a in the beginning, it is always go with the fixed rate, so it gives you more stability to design your income and your expenses.
Right. By the way, many of my buyers, I'm in real estate, many of my buyers, they come, they want to see the property first. And I used to tell them that first, do you have the pre approval? Really, it matters and it is really very important to have the pre-approval
Absolutely,
first.
absolutely.
Okay.
Pre-approvals, clients which does not have pre-approval, they are always at disadvantage. It is always, see, pre-approvals give you your eligibility check, they give you a comfort. See, suppose today you are having a pre-approval. Now there are many sellers. Okay, they are looking if they want to close the deals on a priority basis. Like two buyers are there. One is a cash buyer, and it's okay. He can buy it immediately. But if someone is a mortgage buyer and one has a pre-approval, that means the bank has already, this is the most critical step. Once you get the pre-approval, that you have a in your hand, bank is ready to provide you this amount of finance, this percentage, then you can sign the MOU quickly. But if once you don't have, the seller is not comfortable. He don't know tomorrow your mortgage will be approved or not. So it is also, and it is becomes easier as a real estate mortgage broker for you to show the property where you comes to know that client is definitely is eligible for something. He's a serious buyer. So he's not playing around in the market or just sometimes it is also with the pre-approval. He knows what is his budget. So you can show him the property in that range.
Correct. By the way, how long does this pre-approval take today's?
As I told you, depends on the client profile, his salary, his credit bureau score. If everything is streamlined, we can give you a pre-approval sometime within hours or maybe minutes also.
Oh, really?
Yes.
So
There was a time it used to be, you have to get everything wet signatures from the clients on the application form and all. But the banks have really done a very big transformation by making things more digitalized. Dubai is all about, UAE is all about digitalizing things.
Correct.
You go and in land department, you with one signature, or you go on the trustee office when you do a property transaction, one fingerprint and you get one page title deed and that digital. They don't give printout.
That's the good thing about the way that everything is online and everything made so easy so that buyer, seller, even a broker, they go through everything online and it's very easy and simple they made it. That's the best part of. Let's talk about the mistakes. You have seen thousands of cases. What are the top mistakes makes by buyers when they are applying a mortgage?
Oh, you're talking about the client making a mistake. I thought you were pointing me. I'm making a mistake. No, see, of course, when you are actually, it's not about the mistakes what client make, but they should remember few things while they are structuring their financial, getting into financial liabilities or applying for a mortgage. See, that is where we comes into the picture. Okay. First of all thing, they should be always aware that what is the total cost they have while purchasing a property. The down payment. Okay. So, there are some associate cost while purchasing a property. It's not only the down payment. Okay. So there are Dubai Land Department transfer fees is there, and there are real estate broker fees involved. There is a trustee fees, mortgage fee. There are certain fees, there are some charges from the banks also. The banks also have some fees. So they should first make arrangement about the down payment. And also they should compare the banks. See, as I told you, there are around 20 banks offering a mortgage in UAE. Now client has salary in one particular bank, they go and just check, or they apply, and it's a big financial liability. So client should always get in touch with mortgage brokers, like you have
Where you come in the picture.
where we come into the picture. So
Of all the
yeah,
banks and
yeah.
compare with comparing with all the rates and other things you
See, it's also comparing out not only about the rates. Okay, there are rates,
other
there are
things.
some banks fees and charges. There are many certain things where there is the exit fees from moving out of your mortgage and all. So what we do first, it is very the most crucial thing that we have to first meet client, understand what his requirements are, because there are as 20 banks have different policies and different features, different benefits. So maybe there is some client who wants fixed rate for a longer tenor to have more financial risk. Some people think no, we should go for a variable rate. So variable rates in the beginning, it consists of a EBOR plus margin. So some banks EBOR and variable rates are cheaper. Some banks fixed rates are cheaper. What are the exit plans? Somebody wants a mortgage, they want to move out after 5 years. So there are some zero exit plan fees for some banks if you move after some time. So this is totally when customer tell us this is my priority. So we from these 20 banks, we filter some banks, we prepare the illustrations, what your down payment, total fees and charges would be, what is your interest rate with this bank, what is the fix, and this bank offer you 2 years fix, this bank offer you 5 years fix. So if you cannot mix and match, if this bank has that feature, this bank has a different feature. So we prepare illustration, we share with them, they compare what is good for them. And even if after filtering 3 4 banks illustration with them, they still need our advice. And we want to make sure, ensure, because we are not working for one bank, we are working with major all 20 banks here. So it is our responsibility to make clients sure that there are no hidden fees, no hidden charges.
Which one of these mistakes causes the biggest delays of rejection?
Good question. uh, Basically, I would advise the mortgage buyers that when you are applying for an application, uh, without comparing different banks, all the banks, don't apply. First, you compare all the banks. As I told you, as a mortgage broker, when client comes to us, we always share with them as per their requirement, what are the priorities, how they want to, structure the mortgage, what they are looking pursuing basically while purchasing a property, and what are the mortgage requirements. We send them a 3 to 4 banks illustration with comparison. Now what happens, sometimes clients applied without informing us 3 to 4 banks, okay, and they apply, and suppose without a proper documentation, and if they are applying with someone who is inexperienced in the market, so there are many chances, your application is rejected. And once your application is rejected, you apply with more banks, your credit bureau score goes down. And some client think like first they will have a pre-approval, then they will compare. I would never advise that. First you compare which is the best suitable bank is for you, then you apply with that, precisely with that bank. It's not advisable first you take 3 4 pre-approvals, and then, because once you go with one bank and you finalize a deal, so that bank, your bank may ask you that we can see in a credit bureau there are other 3 mortgages applications showing under your profile, so you please go and cancel that. And going with 3 4 other banks to cancel the application, it's a very hassle task, trust me. So always better first compare the banks. And as I told you, with while your application is in process, if you are dealing with us as a mortgage broker, tell us everything very transparently, so we should know what are the things. When you go and meet a doctor, you have to tell him everything about your health and all. So we are like a financial doctor, discuss with us everything. You are an asset for us. And if you are coming to us through a real estate broker, always remember, real estate brokers deal are more bigger, they are more focused in closing, concluding the deal, so they will never advise you someone wrong or who is but they don't have experience in mortgages. So if they will always advise you a right mortgage broker, because they have experience working with them, like Mr. Kamal. They have closed around, I think, more than 20 deals with us in today's time in last 3 4 years. And there was some, you have in between, you have called me that your client has got a rejection in the mortgage at last moment, what to do, and we have concluded, right? Yes. So we are Dubai Real Estate Institute affiliated mortgage broker, RERA certified. And our experience, my team, they are all veterans in the mortgage, is like working with mortgages from last 15 20 years. So we will give you a very right, transparent advice with all clarity. So trust your real estate broker, then you trust us, and compare whatever you difficulty you have, whatever you need, discuss with us. So we will be very transparent. Know your down payment, what is your down payment coming. You should not be left, oh, this was not informed to us, we didn't consider this. So always have full down payment calculations with yourself, so you know your budget. You can maybe buy, if you have a budget of like some amount 2 million and your budget says you can go, mortgage eligibility is more, then you can definitely increase. So there are, you have some rental incomes coming or some variable incomes, additional income that can be also added by many banks, you know. So discuss with us and we will not let you get into this mistake.
Dubai has so many banks offering a mortgage. How does a buyer choose the right bank?
See, most people think it's just about the lowest interest rates. So it's not only the one part. You know, there are other costs involved over time. So you have to look at your over cost in the entire tenor. There is also early settlement fees, exit fees. Different banks have different rates and charges. They have their own fees. All about this also depends on the service quality of the bank, about the approval time of getting a pre-approval, concluding a deal, time limits. Sometimes you have a very less time. The seller says, "I want to finish this deal in this such time." So you know there are some banks which are very efficient in giving you a concluding a deal. So sometimes interest rate is the only not thing which matters. It's also you are getting suppose a very good distance and you want to complete it fast. So you have to put what is your priority. So getting a deal concluded, and you know, like as I told, all the banks are very competitive with each other. The hardly the difference, you know, if you compare like loan of like non-STL loan or STL loan, apple to apple. So the margin is just difference of 0.25%.
So, do you find that buyers often focus mainly into the interest rate, not the other factors?
Yeah, there are many. Obviously, there are people who only look the interest rate part. If I give you an example, if you go for a let's say mortgage of 2 million, okay, and see the interest rate 0.25% differences. First of all, you have to remember it's not for the entire tenor. This is only the fixed rate tenor, like 2 years, 3 years, or 5 years. So now mostly people choose 2 to 3 years fixed rate. So you have to see the difference of 0.25% comes to what is the difference of like 2 years fixed rate, how much is the difference. But there is some bank, then there are costs involved, is like a life insurance. Some banks have a lower life insurance, some banks have the life insurance which is double with the other bank. So you have to add that also in the interest rate. Then there is a processing fee. Some bank give you low processing fees, zero processing fees. Some bank charge you processing fees. So if you do a overall calculation, maybe a bank is giving you a slightly higher rate, that overall cost could become should be less along with the bank which is giving you a lower interest rate.
Correct, correct. So the buyer has to see it properly,
Yes.
everything before applying, and they should consider it.
True, true,
Right?
true. Yes.
Let's talk about the trends. What are you seeing the mortgage market right now?
See, as I see, there is a huge demand in the mortgages. There are, we see a sign of refinancing nowadays. Banks are very competitive. uh, Interest rates have started stabilizing. They were high because of the global conditions. Now we are seeing the signs of interest rates stabilizing. Banks are very competitive and they are supportive. Like as I told before, it used to take weeks to get the approval. Now there is you get approvals within days and sometime in an hours and minutes. Also, there is a demand coming in the refinancing. People, first of all, those who have taken a mortgage on a higher interest rate, they are trying to restructure the mortgage with lower interest rates now, because we are seeing a dip in the interest rates. Also, uh, demands in the equity release also, which we called refinance and equity. So, uh, the prices of properties have gone higher as compared to who have bought last 2 3 years back. Now you want to invest in second property, and if you say there is a shortage of your down payment, or you can take full equity from your property. So I'll give you an example, Kamal. Like if you have a property of let's say 5 million, which is fully paid, you can take a mortgage of 3 million on that property. You go and purchase 3 million property fully on the bank's amount, no down payment required. In case you have a mortgage of let's say 1 million, 2 million, the bank will buy out your that mortgage and they will give you what is the balance amount to purchase another property. So I have seen there is a huge demand in this sector. People are using their property to take against to take equity against their property and invest in another property. So overall the market is very active globally.
So, Acha, one question I have it. There are residents of UAE, they can apply for the mortgage. At the same time, globally there are many investors or many buyers. They want to buy a property here. And do they also get the mortgage? If yes, then what will be the ratio? How much percentage they are getting it?
This is now since a long time. There is a finance for non-resident clients. If you are not residing in Dubai and UAE, and if you don't have an income here, there are lots of investors are coming and they are taking mortgage.
Oh, really?
We are getting them around 65 to 70% mortgage, even for the non-resident clients. So
Non-residents.
banks are very supportive.
Great. But what will be the documents they require in that case?
See, with the same document like what we need for the salaried clients of Dubai. You just need to give your passport, your salary a copy, your salary certificate, or your business trade license that you are doing a active. You are active earning person in your home country. Just with your supported with your last 6 month bank statement. That's it. It's very simple. Maybe we can require a credit bureau report from your home country. Very easy. This market non-resident finance is going on for last 3 to 4 years, and this is the main thing which is attracting the investors to come to UAE and invest.
One of the biggest challenges buyers face is a decision paralysis. They compare so much, they see so much time of interest rate, and at the end, they lose the good deal. If you had to give them a fast decision maker framework, what would it be?
Kamal, this is the most standard thing what a buyer should look in the beginning. First of all, they should compare the banks, the interest rate, the overall cost, and everything. Then they should look about the down payment, what and to and make the budget. According to the down payment, only you can make the budget of the property. What is the maximum property you can go for? Then, according to that, you should apply for a amount of the loan, which is we call as a pre-approval. So then once you share your document, we tell your eligibility and we apply with the bank which you choose. If you we give you a 3 to 4 banks competition comparison analysis, you choose, no, this is the best bank for me, this is suiting my requirement. We apply and we give you the pre-approval. Once you get the pre-approval, the most critical part is over. Then later the things comes, then they select the property, the valuation takes place. After valuation, there is the final offer letter. Once the final offer letter is signed by that respective bank, then the loan is disbursed and we make a transfer in the land department. Yeah. So there is a process, but and we guide you, we take you from starting planning uh, your budget, everything, and taking you to the last to getting your property transaction concluded.
Siddharth, this has been incredibly insightful. I think a lot of listeners will walk away with the feeling of more confident buying a property and will make a smart decision in the way real estate market. Before we wrap up, what is the one advice you give to buyers who are planning next 6 to 12 months buying a property in the way real estate?
Kamal, thanks for your guidance, and I understand my advices have been really meaningful, and I hope it has been really informative for your client to take the right decision. My biggest advice to our viewers is that don't approach buying property in Dubai uh, blindly or emotionally. Take a structure guidance, uh, understand your finance, be clear what exactly you want to buy, because these things will make things more easy. Dubai has, lots of incredible deals, but making a good decision or the great ones uh, comes, with the your ability to purchase and make things a right choice for you.
Thank you very much for joining us. And to my listeners, if you found this episode is helpful, then share with someone who's planning to buy a property in Dubai. I am Kamal, your host. You are watching Kamal Realty Talks, and see you in the next show.
Thank you. Thank you.
Thank you very
Another
much.
thing,
This is
if you are clear, informed, and ready, this market, the things will work for you. Thank you so much. Thanks.